we met, I could tell by your smile. You hadn't been with a good girl like me in a while. Yeah, you were impressed, couldn't leave me alone. Text me every time that you pick up the phone. And I had control in the driver's seat, but my hands are slipping off the wheel. Now the tables have turned, now I'm up all night. I'm picturing you, acting like a fool. I'm on the other side.
Very good afternoon. And today is the second session of our free workshop which is there. And this is the second session. The first session, whoever has missed, if you're watching it on YouTube or if you're watching it live right now, is now on YouTube, so go and check it up. And today the discussions are going to be, there's going to be a different set of discussions. Yesterday was more around the aspects of understanding market in general, understanding how news flows, understanding how a professional trader trades, and how a professional trader really places himself in alignment with the market and in coherence with his style of trading, right? So a lot of you asked very interesting questions and they were answered, and today more questions have come up and very interesting ones again. So I'm going to take each and every question one by one. Okay, I have got Mr. Sai Prasad Ramgiriji. He's saying he made some profit. I won't like to say the number, but it's a decent number. He made some profit out of yesterday's session beginning. So, well, it's good that if you made profit out of some interesting ideas, because we are sharing everything very intellectually and very educationally. So what happens is when the education part is very strong, the ideas tend to be very high probability, and if he's done that, that's amazing. But again, in case you lose money also, the risk is yours. Both the sides, it's completely yours, and you took the risk, you had some conviction, so you made money. So that's great. Thank you and awesome. Okay. He says, just followed what was discussed yesterday, macro and global news and multi-confirmation. Okay, great, awesome. So that's amazing. Good. And if you feel the, if you feel the inspiration, you can go to and check out my website www.technicallysolid.com, and you will see more interesting things over there, right? Okay, Mr. Parag ji is saying that, let's talk about risk and reward. What is the concept and the explanation behind risk and reward? Okay. Is there a reversal in Nifty? It happened yesterday itself. All right. So, okay. अभी पराग जी मैं थोड़ी हिंदी भी यूज करूंगा, थोड़ा इंग्लिश भी यूज करूंगा. एक्चुअली काफी जन ऐसे भी हैं जिनको हिंदी में प्रॉब्लम है, तो फिर मैं ओवरऑल इंग्लिश में ही यूज करता हूँ, और कभी हिंदी का पर्टिकुलर बैच होता है मेरा तो मैं सिर्फ हिंदी में बात करता हूँ फिर वैसे. एनीवे, तो सबसे पहले व्हाट इज रिस्क रिवॉर्ड, मिस्टर पराग इज आस्किंग. नाउ रिस्क टू रिवॉर्ड is basically a ratio which says ki if I'm going to make X rupees or X dollars, I'm going to lose lesser than that. So if there is an entry point, suppose this line is an entry point over here, okay, and my stop loss is over here somewhere. So the distance from my stop loss and my entry is my absolute risk. I'm not talking about risk in terms of volatility or percentage. I'm talking about absolute risk. Absolute risk meaning if the stock is 500 rupees, this could be 10 rupees. Or if you're buying one lot, this multiplying by the price of the stock and the distance, etc. All that put together, this may be say 8,000 rupees. Okay. So if 8,000 rupees is your risk, absolute risk on the trade, okay, and how much is the reward? The reward needs to be superseding the risk. It should be far more than the risk, because your purpose is to make money consistently. So from this point, if this point is touched, which is making you 20,000, then your risk to reward is more than 1:2. It is somewhere around 1:2.5. Okay. So your risk to reward should be like this, when you are choosing and picking trades. Now, is it anticipatable? Is it possible for you to anticipate always how much the trend would trend, right? How much the trend would trend? Not really. Sometimes you have to follow the trend. But there's a certain degree of minimum expectation which you can make, or potential targets which you can make, which can help you set yourself in the risk reward in a more optimized manner, which sort of is optimized with your trading style. And why I say this word optimized? Because there will be people over here, depending on the time frame of trading and the style of trading, out of 10 trades, there may be someone whose 5 trades are going right and 5 trades are going wrong, right? Whereas there would be some other person out of 10 trades, okay, 6 trades are going right, or sorry, 8 trades are going right and 2 trades are going wrong, right? So the person who is having this 50-50 sort of hit ratio, for him a better risk to reward is needed, because he tends to lose on more number of trades than the person with 80-20 hit ratio. So if the hit ratio is lesser or more equivalent, like the number of wins and the number of losses are more equivalent, therefore the win should be very, very big. So a risk reward of 1:3, 1:5, 1:7, this is what the person with a 50-50 ratio would require, right? But if somebody who is having an 80-20 ratio, even a risk reward of 1:1.5 or 1:2 is enough. If he makes a ratio of 1:2, that means if he is winning 2 rupees every time he makes money and losing only 1 rupee every time he loses money, he is still in consistent profits, right? So that is how you'll have to find out what your risk reward should be overall, depending on the style and plethora and area of trades, the kind of trades you take within that area of trades, right? This would be important. Okay, I've got some further questions coming. Mr. Parag, I hope I've answered you clearly. And after I finish some questions, then I come back to the markets. Okay, so there are some interesting questions. One question, okay, why don't you start paid service, sir, if you don't mind? Oh, well, very good that you asked on this platform. Otherwise, I have to keep telling people individually why I don't do paid services. I don't have any paid service for any kind of calls. Whatever ideas I share are there out there in an educational manner, and they are for free. Those who like to come and attend my course, which is a lifetime course, just last night we had a meeting which we have every month with all the past students, and clear all doubts and discuss some special topics sometimes, etc. Those who want to go for a paid version of learning from me, you could join the course. But why I don't give paid calls is because there are multiple reasons, and you all should listen before you make any decision as newcomers in the market, before you get easily sucked into or stimulated by all this which you see around. Anybody in the world, me or anyone else, I'm not judging anyone. All I'm trying to say is that if you have someone out there who is sharing good ideas and you see that, okay, fine, possibly he's also sharing or she's also sharing that, look at this screenshot, my client made money. Look at this screenshot I had posted in my paid group, okay? I am fine, it's okay, it is possible, it is very much possible to give nice calls to people. The problem is that people don't execute it. How many of you agree with what I'm trying to say? People often do not execute even the best of calls. Yes or no? Agree? Agree? How many of you agree? Many people agree. Now, the second thing is that if you've got a certain business, if you want to make money out of something, do you want to be a fly by the night kind of person, or do you want to make something sustainably? And if you have to make something which you can sustain, how much can you depend on the core ideas of your business on someone else? The core ideas of your business should be yours, not somebody else's. If the core ideas of your business, which are happening in the daily operation, it's not that you're learning something once, like my students do. They learn something with me and then they apply it on their own. They're not dependent on me during the market hours at all. They're dependent and happily self-dependent on themselves. So I feel that if I teach, then I will empower people with understanding that ideas and generating something which has strong foundations and it will go in the long term with them. And if I really go and give some paid service, uh, I know it is a money spinner in the sense that if I give a paid service right now, I can raise a lot of money for myself. But the problem is that I don't believe that success and money have a relationship with the way people believe in general. I believe to be rich, you have to be successful. You don't have to be successful to be rich. Getting the point? I'll just give you how. What is success? Basically, success is not about making money. Success is about giving those services, and in case you're doing some business where you give goods and you exchange material, tangible goods, uh, or you give services, or in case of trading, when you lend your services to yourself as a trader and give yourself those ideas to execute. If you do that, you are a success. And if you are a success, you will get the money. That's how I personally feel. And we are stepping into a generation. We are the most underconfident generation which we have ever seen. I mean, seriously, we are underconfident generation. How many of you have these stories like मेरे दादाजी आए थे 50 साल पहले इस शहर में आए थे जेब में 10 रुपए लेके. How many stories do you think like that happen today? We are the most underconfident generation, so to speak. So already underconfident generation. How much do you want to make them underconfident? I really don't feel I'm doing anything good by giving away paid calls and not empowering people for the long term. If I give paid calls, sometimes people will make money, sometimes they will lose money, because even then there can be some stop losses, right? And if they lose money once, they don't know why they lose money, so they become very, very frightened with the next call and they don't take the good trades, and they come into this psychological scenario which is very disturbing for them. And when I teach the course, I also teach them trading psychology and teach them how to neutralize the hangover of the previous day's trades, right? If you're in profit, you can't be overexcited. If you're in losses, you can't be very, very sad. So I personally feel this is the space which resonates with my personality. And I think the video is frozen for some reason. No worries, I'll switch it off for us. I really feel this space is more resonating with my personality rather than having to give paid calls. So I hope I've given that answer to everyone. And maybe somebody may not like this answer. Maybe somebody will be dying to see some paid call services by Mohammad are coming up. But trust me, I really feel that that creativity which I express in an educational way or in my own trading, I see that as something which needs to restore its respect and its nobility, and its quality also comes out better in that way, right? So I hope I've answered you all. I mean, because what happens, a lot of people are asking this because of the greed, right? That if some kind of paid service happens and it benefits me, then it's a win-win situation. That is what you're thinking right now. I am not saying that I'm going to do a poor job or somebody else does a poor job. But if I do give this paid service, how many of you will be able to sustain it for long term? Trust me on that. And this is something which people are not understanding in today's world. Okay, now Singhaji is asking, do you agree 10% of the traders gain money in the stock market? I believe less than 10% of the traders gain consistent money in the stock market. And Mr. Narsingha, I'll tell you also this. Today we have got so much technology. Okay, 20 years back you never had Zerodha, you never had any discount broker, you never had charting softwares. You never had people like me on Telegram or on YouTube or on places like this where we're having an interaction. Then also 20 years back, only 5% of the people made money in the markets. Now also only 5% people made. So even technology has done nothing to us. It has just distracted us. Okay, if you just look at the core part of it, it has made a lot of things available, thank God. But yes, it has distracted us also at the same time. So the essence that people are very knowledgeable, they do higher education and all, that has not really added a lot to how people perform in the market. The essence that we have got so much technology, that has not added a lot to the ratio of how people doing in the market, right? So all this put together, the game is very psychological, and the game has to do with purely understanding the price mechanism. Of course, understanding the market in general also, but price mechanism is very important. That is what technical analysis and charts do. Also, I've seen a lot of these, statements which are flying around, that intraday strategies. I mean, I'm saying this loud and clear to you all. Every day is different. There is no one strategy which is applicable to, applicable to every single day in the same way. And if you're looking at the 15-minute chart or you're looking at the yearly chart, technical analysis is supposed to be fractal. That means the patterns I see on the hourly chart is the same patterns as I see on the daily chart. So it is fractal in nature. If there is some pattern which is on hourly chart telling me that there is bearishness, and that bearishness may continue, the same thing I can find and show you on the daily chart also. And depending on the situation of the market and the phase in which I want to trade, I can use that knowledge and I can look forward to trade in an amicable way. Right. So what happens is that when technical analysis is fractal, every day is different. Your intraday strategies are the same strategies you anyway use overall. Okay, it has got nothing to do specific, but the thing is, it is given out in the world in such a way so that people tend to buy those things. The entire financial industry is surviving on you buying and you selling. Getting the point? It's surviving on you buying and you selling. The entire financial industry. So we never understand those things. Yes, Karunakar ji, I'm seeing your message. I will answer your question next. Yeah. I can see your message, not an issue. So there are a lot of things flying around, and 85 to 95% of the things you see when you read about the market or you see YouTube videos, most of them are just useless. They're just trying to show you shortcuts. Someone will come and take one indicator, and one indicator they will show the best case scenario, and where people will feel happy that okay, something is possible, give people some hope, and the next day this will happen. If I give a paid service, I know 50 people will come right now. If I give a promise of giving some shortcut strategy, I know 100 people will come right now. But when those things don't exist, then I can't make a fool out of someone else. That's what I personally feel. And that the quality with which you do things determine the work ethic and the moral ethic that we put into things, that really determine. And most people are scared to talk about it. I'll tell you why they're scared to talk about it. Because being in a position where you are very public with people, you tend to always have a chance to change your mindset in order to serve your own benefits. And people are scared of that day when they might have to do that. And that is why they don't talk about it. But there are many traders and analysts like me who are public and who feel that they need to be more honest. It's just that they don't find the possible, they're waiting for the time to talk about it like this. There are also many trainers, I'll tell this openly, because there's freedom of expression and I'm not taking any names. There are also many trainers out there who would promise to train you and take a bunch load of money, this, that, and not really focus on the process of training properly. Like I get messages every day, when are you coming to this city, when are you coming to that city, for a 2-day workshop. And I say, what I've learned in 10 years, I cannot teach you in 2 days workshop. Please understand. Even if I have a 2-day workshop sometime, it will be very topic specific. It's almost impossible. I can give an overview, but I cannot teach you the way I teach in my 15-session course, which is an online course. So don't wait for me to come to any city. And this 15 session is a 2-month-long course. If I do this 2-month-long course, it suits my ethics, it suits my moral integrity. If I want to give some shortcut in a few hours and run away, it doesn't really suit the purpose of it. So if the inner purpose is, inner purpose is always the most important thing in life. If your inner purpose is solved, the outer purpose eventually gets solved. There are many things many people do where the outer purpose is solved but the inner purpose is not solved. Again, many of you are new to me, So this side of me, my students get to see more. But what I'm talking about, you understand this, right? And Karunakar ji says, I have taken multiple paid services but never been satisfied with the service. And I'm more than sure every time you were ready to pay for those services, there was enough proof given to you how good this service would be, right? So don't get into that rut. If you really want to make money in the market, want to be consistent and all, okay, Mr. Sai Prasad, my team, you can just contact my team for all those things. If you want to know about the online trainings, you contact my team. And you can contact me later. They can set up a call with me for you. Not an issue. Okay. So that is a 15 session course. But what I'm trying to tell you is that there are, you know, that there is a integrity one needs to keep. Being in a position where you are very public, you have the access to influence. And how you influence, there was a Hitler also and there was a Mahatma Gandhi also. How you influence is how you are remembered. There is no other currency in the world. There is no other currency in the world. The influence you have on people in the long term and what the end result is, that is the only currency. And that is what I believe. And that is why I teach the way I teach. And it might seem a little less exciting to some people. अरे यार paid service होता तो क्या मजा आ जाता. अरे क्या फायदा होता सबका. ऐसा. So this is the problem. You don't understand what happens when you start paid service. How much can you execute? Okay. Then also, personally speaking also, I will have some limitations. Say for example, I have a number of trades which I've already given during the day. Okay. I cannot supersede that sometimes. So I have to restrict myself sometimes, right? And the way I restrict myself as per my trade selection, I can do that for myself because I'm managing my own money. I know I made money in the first trade in the morning. I will take a break and in the last hour I found a good trade, I made money again. Fine. But I can't do that for you because you may be going traveling to your work the time the call comes, and within the second it will come on Telegram. By the time you call up your broker or you hit the button on your app, the price is already risen. The execution issues with any kind of calling services, paid call services, right? Okay, yes, Manvirji, definitely you can get in touch with my team. Not an issue. Okay, Karunakar says, yes, they will show this as I'm a private employee. I preferred them and lost a lot. That's what. So what happens is everybody wants to take the leverage of the stock market and the leverage of the movement which is happening, least realizing that the leverage you cannot take just by having money in your bank. Be it you're doing a job or doing some other business, just because you have some surplus money doesn't mean that it allows you to make money on this platform. It gives you a chance to make money on this platform, but it doesn't allow you to make money on this platform. So there is a difference between the two. And understanding that difference is what maturity we need, right? There will be this difference between the two. What is happening? Oh my God, this is getting frozen. I think because my software is also running, no, right? That is what. Anyway, understanding this difference is very important. Okay. Do you see Nifty 50 or futures chart? I see Nifty 50 spot charts. I don't see the futures chart as much as you possibly think. First of all, futures chart, many times you don't get the continuous chart. And I understand one thing, that there is a lot of participation and liquidity in the spot also. Okay. Now, as we speak right now, we have come closer to these resistance areas. And now Nifty 50, when it's coming to Nifty 50, it is a combination of the 50 companies, right? It is a combination of the 50 companies that we see. And the combination is continuously coming out of the buying and selling happening in those 50 stocks. So that is real buying and real selling. That is really influence the price and full of liquidity. It involves my psychology. It involves my mass psychology and technical analysis, the study of mass psychology. So that is something which is you need to understand, right? So that is why I just look at the Nifty 50 spot chart. Sometimes I do look at the futures chart because again, futures also involving participation, but that's something like maybe 2% or 5% of the times I will look at it. It was not, and that too just like that, just by the way, no, not because I want to study something out of it. If you look at the spot chart, it is enough. Yesterday we were discussing a move which we saw on the 15-minute and the 60-minute chart, and I was talking about this as yesterday the questions were, how is it relatable if I have to exit, okay? And I said that I will have to continuously hold on to the trend until I find significant signals of reversal, okay? And till then, the portion of the trade I have to keep a cost to stop loss at a valid point as a stop loss, right? Maybe according to money management, if not according to exact technicals. So I kept that stance, and as the market went up, I think our this thing ended up somewhere over here. We saw another 60, 100. First we were 70-point movement yesterday itself, and about total of 120-point movement together. So, and that is when we started to discuss. But even before we started to discuss, which we discussed in this area, uh, I spoke about the triggers coming somewhere around here very smartly, and the smart triggers were also there on the daily charts, so that is there. Now I get this question again asked yesterday. I missed out this one, and yesterday was a perfect day to answer this question. Now the question is, so what is BTST and what is STVT, right? uh, okay, so this is one question which is, I'll take this question up today. First let me just finish if I missed out anything. Okay, Sai Prasad ji is asking some light on stop loss and target. Okay, some light on stop loss and target. Mr. Sai, every trade is going to be an output of a setup, right? And that setup will involve multiple tools. Like in one of my setups, if I have got candlestick, then it will have a majority of the candlestick evidence. Some other setup may be a pattern based evidence. Some other setup may be some other evidence, okay? Some multi-time frame setup may be multiple evidences, right? So depending what is the evidence on which I am taking an entry, I will set a stop loss. Now many people think that setting a stop loss would mean a breakout point. Not necessarily. There's different scenarios to some patterns. And in case of Elliott wave theory, the stop loss again is different. Because I tend to mix Elliott wave with patterns. It works out better for for most of the cases, and it gives you different kind of conviction also. Makes you understand which patterns could be false patterns, false breakouts, or which patterns could be strong breakouts. Now this is a very big distinction which most people can't make. And what would be the magnitude of certain moves also Elliott wave theory helps. So patterns used along with Elliott wave theory and along with candlesticks becomes far more powerful. Now when I talk about Elliott wave, I'm talking about patterns, I'm talking about candlesticks. These are the concepts which are related to the physical nature of the price, right? Then there are concepts which are related also to the the derivatives of price, which are the indicators, right? So indicators you can't base a stop loss on, because indicators are not based on the price. You can't have I'll take a RSI 20 as a stop loss. No, you can't do that. Sorry. So depending on what we use in candlesticks, patterns, or Elliott, I take a stop loss depending on what is active in that setup. And so is the target. And target also involves, one is a pattern target, the other is the potential support resistance, which is the nearest. And the third is developed depending on seeing how the move is unfolding. Okay. So sometimes how the move is unfolding, how we need to follow the trend is far more important than the target. The target gives an easy hook to people because you're mentally hooked to that target. You find it easy to be patient with the trade, which is good, which is one part of the story. But until you don't observe and give the room for some flexibility, it is impossible to trade, because nobody in the world, there's this video by Rakesh Jhunjhunwala, you see on YouTube, you'll find it. He's with, I think with Ramesh Damani or someone, he's answering some questions. Somebody asked him, what about targets, or what about stop loss target? So Rakesh Jhunjhunwala said, I don't understand why people say target, target, target. And when there is momentum, and as long as there is momentum, they are all targets. Otherwise, there is no target. Right? So You need to follow the trend and to identify the trends. And to do that, there is a lot of work, right? Mr. Bandi Naresh is asking about, can you please tell me about trading strategy using multiple indicators? Very good question, Mr. Naresh. Multiple indicators. So what happens is, for further details on this, there's a free video I have on YouTube. Okay, it speaks about indicators alone. It's called the Introduction to Indicator Factory, and this indicator factory, the video you can find on my channel. So you'll get a lot of insights, but in a nutshell I will tell you, every indicator is telling us something, and that indicator is giving us an idea about that concept. So for example, I put RSI right now on my screen, and let's take up some stock also. I'm not used to having just one chart right now during market hours. Yeah, let's take up some stock. Okay. So I'm going to take Century Textiles. Okay. So I have taken Century Textiles, and this is the daily chart of Century Textiles, right? Now, if I am an enthusiast about RSI, I know the overall trend is down right now, dominant on the daily and the weekly. And what I need to understand is the indicator very intimately. Okay. I see some sort of a distribution pattern developing over here. And this distribution pattern is the key confirmation for me to understand that the price could have a potential downside. Okay. If this happens, then I have to see how the RSI is coherent. And in my observation, whenever there is a breakout move on the downside, many times I see that the RSI is somewhere near the 60 zone. Okay. I'll show you more examples, and in my other live sessions you can see live examples like this. So I have understood the intimate. I'm just giving you one factor of the so many factors I read in RSI. I'm just giving you one factor, okay, just as an example. Mr. Badinesh, I hope I'm answering you correctly. Okay, so this is me understanding the indicator very intimately. Okay, then I have another indicator, say moving averages. Okay, or say let's take Bollinger Band, right? What I use by myself, I'm sharing that with you. One second, please. One second. I'm putting the indicator. I put Bollinger Band. Okay. Now in Bollinger Band, my essence of understanding Bollinger Band, again, one of the scenarios, I'm sorry, my software just got this thing. So I will just open the software again. Kindly wait 1 second, please. We'll just start running it. 1 second. Kindly wait 1 minute, please. It's reading. Kindly wait. Yeah, okay, this is the Spider software, Mr. Murli. And the Spider software is one of the softwares I've been using since long, so I like it. It's a professional software. Now what happens is when we have a professional software, it gives you, there are certain edges it has, or it has certain, viewing advantages also, if you may say. But it is completely fine to use free platforms as in when you feel like. So it's completely fine. Nothing wrong with that. So let me just continue as the reading happens because so many things are running on the computer right now. Probably that is why it is taking a bit of time. So I put Bollinger Band also in my understanding over here. I put Bollinger Band, right? And let me put Bollinger Band on the daily chart for some better clarity. Yeah, the reading is started. Sorry for the glitch, guys. Yeah. So one of the understanding which I have of Bollinger Band, okay, just like one of the understanding I have of RSI, spoke about that 60 zone. Everyone with me right now? Everyone following? Kindly raise your hands if you're with me right now. Thank you. Yeah. So, as I spoke about the Bollinger Band scenario, okay, now what happens is, as I spoke of the RSI scenario, now I have one of the aspects of Bollinger Band which come with me. That is, there are about 6 scenarios of Bollinger Band, 6 to 8 scenarios. One of the scenario is that consolidation near the middle band has certain aspects, okay. I have to really go into details if I have to clearly tell you these aspects, and I don't want to mislead anyone by giving half knowledge. So I'm giving you an idea what it is. It is somewhere near the middle band if there is a consolidation, and it is followed by something happens, okay. If followed by a down move in this case, something happens. There are on the hourly chart a sudden move from up to down, the upper band to lower band, it means something. So what the different aspects and scenarios of an indicator mean is very important. Okay, so if I go short on 874 or if I go short on 860, somewhere like that, I get a movement till 800, which is almost a 8% movement. It's not a joke, right? So you get to understand when you correlate or when you see the confluence of different indicators. These are just two, there are many others, and there are others. Now this is telling me about volatility, whereas the RSI is talking to me about momentum. Okay, so different indicators have the different aspects, right? Different indicators have the different aspect. So you need to see it in that light, then develop that clarity. Like one of the indicators with Bollinger Band, one of the things is when the entire candle is below this in the hourly chart, okay, or even on 15-minute chart, it turns out to be interesting. Entire candle is below this. Now, how do I set the condition for on a software, etc.? We will learn to know that level of details, and of course, you should join my course, and you should definitely understand in further details. But the essence of taking a few indicators and mixing it up and making a system out of it, that is the key. And many of my students are actually, I would not call them completely indicator based because their price mechanism understanding is also awesome. They use that as an input. So what they do is they have done on the basis of the learning of our sessions of indicators, they have gone and done a lot of practice, made their notes, and used that knowledge to look for the essence coming out in more than one indicator. When it comes out in more than one indicator or more than two indicators, your probability becomes higher. When your probability becomes higher, so your problem is solved. Are you getting, Mr. Murli? Am I answered you clearly? Uh, Thank you. So, Mr. Sai Prasad is asking, sir, discuss if possible acting on positional trade with overnight news in opposite direction. Okay. So, the thing is, Mr. Sai Prasad, I can be someone who can teaches you something, right? I can't really be, you know, basically I can't really, there's no magic trick I can do, right? I mean, if there's the overnight news and your trade is on the opposite direction, what do you do? You should have asked me before taking that trade, right? It's a good question. I understand that kind of a confusion, but you have to have setups that are with the broader trend, that have certain inputs. Exit if it is not working out for you. Most people find these issues only because they're holding on like all the time. They're holding on. See, there are two ways people lose money in the market. I have this very famous example I tell everyone. How many of you know this example, dog and donkey? Dog and donkey example? Okay. Okay, the dog and donkey example you don't know? Okay, I'll tell you. So I was reading this article in a newspaper in a country, okay, and you see this example in many of my videos and seminars. So what happens is in this country, there are many road accidents because of two animals, particularly a dog and a donkey. Now why sir? Why is it happening like that? Because you see what happens is a dog, have you seen a dog crossing the road? Have you seen a dog crossing the road? How it crosses the road? Kabhi buy, kabhi sell, kabhi aage, kabhi piche. Right? It becomes very confused because it always wants to be wanting to be impulsive. Right? So many traders in the many traders in the markets lose money because they want to always be impulsive, and they lose small amounts in many trades. Number of trades are more, and the amount goes small, accumulate to be a big amount. And the other is a donkey, जो एक स्टॉक लेता है और उस एक स्टॉक के लिए गधा बन जाता है. The donkey comes in the middle of the road and becomes a donkey, right? So how many of you resonate with this example which I just said? A dog or donkey? You can type which animal you feel like also. I have made the mistakes of both. Thing is, either a dog or a donkey, you don't need to be either impulsive or you don't need to overly hold on to a trade, right? Thank you for being sporting enough. Many people are raising their hands, right? So you don't need to, and you make these decisions ultimately which are strong decisions, clear decisions, have a room for some flexibility, and go ahead with that perspective, right? So you have to make that thing, you have to make it happen. It is not going to happen just like overnight. And it is not and also what is happening, the retail trader on an average is not knowing what are the kind of scenarios they can have. Like yesterday, I believe somebody asked a question, I asked them, I don't remember the name, but I asked them, are you new to the markets? Because you are new to the markets, you have impressionable. You feel like, अरे ये हो सकता है, वो हो सकता है, ये हो गया, वो हो गया. The पहला first month or the first few months of the market is very much there in your psyche because you're very impressionable, like a baby is. So they don't know what is coming next. And obviously, if I have so many thousand followers, if there's a professional, trader in front of you, if there are professional courses that I have done, now obviously there is something of expertise which is required. It is not that कि अरे यार ये क्या करने वाले, ये तो वही बोलने वाला जो मैं करता हूँ, buy करना है या sell करना है, दो ही चीज तो कर सकते हैं. Right? There is some expertise required over here. And if you want to get a hands-on overlap with that expertise, then you need to work that hard as I did. I'm not saying you have to come and learn from me in my paid course. I'm saying you learn from anywhere. Of course, to have a teacher, have a guide, have a mentor, it is better because there's so much data out there, there's so much disclarity out there. But you learn from anywhere. But are you taking those steps? Are you taking those steps after learning? Are you applying that learning? Do you know how to apply that learning? There will be days and hours in the market where for hours probably you will not get some interesting trade. Can you be okay with it? Can you be okay with waiting because you know that something better is coming? Can you be okay with it? These are questions we need to ask ourselves. Any other questions you can ask? Nadeem ji is asking how do we plan entries and exit in a stock? So for that you need to learn, no? Nadeem ji, that is a very long answer. And today I plan to take up some interesting things. Say every day I will take up some interesting concepts. So today I want to take up indicators. Since we are already talking about indicators, it will go ahead with the flow, right? And if you want to check out my website, you can check out my website for understanding how to do it. Every concept will have its own way of going about. Okay. So let's take for example Bollinger Band. And I said Bollinger Band is thank you Nadeem ji. Bollinger Band is something which teaches me about volatility. It was started by John Bollinger, who was the inventor of this. And John Bollinger understood one thing, okay, and that is what he tested, etc. John Bollinger said that because in markets, and this is something observable to all of you, in markets, volatility is mean reverting. What is it? Mean reverting. See, many people think about the direction. Understood? No problem. Sometimes people think about strong moves. Right? No problem. But many people ignore that there is some aspect of volatility. One day you come to the market, there's a lot of money to be made. Lot of money to be made. You make that money. The next day you come to the market with the same expectation, you lose that money. Happens. Why? Because you are expecting the volatility to be there as it was yesterday. So I'm not saying it happens overnight every time. It's just that the level of volatility keeps changing. Volatility means one-sided move. One-sided move, एक तरफा move. एक तरफा move. Everybody comfortable in Hindi? Raise your hands. एक तरफा move, right? Okay, some people are not comfortable. I'll switch to English, but एक तरफा move is like एक तरफा प्यार, right? It's like one-sided. So when you see a one-sided move, okay, when you see that there is movement in one direction, that is volatility. It is like standard deviation, which we learned in statistics and mathematics, right? Standard deviation. Deviating from the mean. Deviating from the what? From the mean. So this standard deviation is the key to understanding volatility and understanding that this standard deviation keeps going up and going down. Here we are not talking about the direction. Bollinger Band is less about the direction. Trust me, it is less about the direction. And people don't see it that way because it seems as if that there must be some secret behind in between these lines or something. There is direction aspect eventually, but the Bollinger Band is not created because of the direction. It is created because it wants to explain and express the nature of volatility. Now, can markets be going up and be volatile at the same time? Yes, markets can be up and volatile at the same time. Volatility means one-sided. It has got nothing to do with up or down. Okay? It just means one-sided movement, ek tarfa movement. Right? Now, there are phases in the market where the volatility becomes very, very high. There is one-sided movement. And then the market settles the volatility down. The volatility settles down. There is lesser movement, lesser one-sided movement, right? And those phases the market goes sideways, the accumulation or distribution patterns, etc. There is level of participation is also lesser. In volatile times, the level of participation is more. So yesterday when somebody was asking about Bollinger Band and volume, the Bollinger Band and volume you will see many times go together because the Bollinger Band is expanding and showing me that more volume is there. More volatility is there. Then it has to be due to the participation. And if there is more participation, volumes increase, right? So it's not a surprise that Bollinger Bands and volumes will go hand in hand. The logic behind it is that Bollinger Band is showing me the participation through volatility and volume is showing me participation through the participation. Volume is participation, right? So the essence of volatility is that what John Bollinger actually brought about from his understanding of the bands and of understanding volatility. He said that if volatility can be measured in a percentage, that means if can be measured in standard deviation, what happens? If it can be measured in standard deviation, and how is standard deviation calculated when we were in school? Standard deviation, how many of you remember standard deviation was the sum of squares, something to do with the sum of squares? How many of you remember sum of squares wala scenario? Right? So that sum of squares is standard deviation. And the root of sum of squares is standard deviation. So what is the sum taken? The distance from the mean. Regardless of the distance, because we used to take only absolute numbers. We never took positive or negative. The moment you square it, even the negative becomes positive, right? The moment you square it, even the negative becomes positive. I'm about to open a slide to show you the better this thing of Bollinger Band. 1 second, please. This is how the Bollinger Bands look like, right? And they are meant to give you two kinds of hypotheses, okay? Two kinds of hypotheses. One is finding the expansion and contraction, okay? And also the other is finding the extreme. So right now what we are speaking about is the expansion and contraction. The picture in front of you is showing you contraction of volatility. The market has come to a sideways movement and it is contracting in volatility. It is compressing in volatility. And after that compressing of the move starts an expansion of the move which leads to one direction. So the essence is that when the volatility in one direction has started, it is like rain. In this process of the volatility crunching, just imagine the water vapor has gone up and the seas and the rivers and the oceans, the water vapor has gone and the clouds are full of rain and full of moisture. And when the volatility has started on one direction, the rain has started. Rain starts, one doesn't stop easily, right? Rain which starts once doesn't stop easily. And this is how the essence actually comes about. This is how the essence actually comes about. So you have to see it in these terms, get a feel of this and understand that there are many scenarios related to one indicator. So if I've taken Bollinger Band, what are the scenarios related to it? First scenario we discussed was of the expansion and contraction. Right now you see contraction, then you will see expansion later. So let me take up a chart for an example, right? And in between, if anyone feels like asking any question, feel free to do so. So I see a chart of Wipro in front of me, and this is showing me contraction over here. Contraction over here. So over here I'm seeing that the volatility has compressed. The logic is very simple. And the volatility expanding in one direction could lead to further expansion. Now you have to understand the time frame you are seeing also. Okay. So we see the price is smartly now going along with the upper band. Now most people feel that upper band should act like a resistance and all. That is nonsense. Don't think like that. The upper band does not act like a resistance. At least right now what I'm saying, no. Only in one situation, upper band or lower band acts like a resistance or a support. Only in one situation, not in every situation. There are 6 to 8 situations I explained as this. Okay. So right now, if the expansion is leading to the contraction is leading to an expansion, the trend tends to stay. And once the trend has begun, so there is a way to find out that how the contraction and expansion is behaving, right? And then there is a way to find out how the trend phase is behaving. So when I see the phases of the phases of the trend are interrupted with what? Deep corrections and shallow corrections. So in case of the deep corrections, you will notice that from the upper end of the Bollinger Band, the price going to the lower end of the Bollinger Band is not difficult. Okay, it can happen, and they give you spaces from where strong bounce or strong falls happen. And in case where the trend is having shallow corrections, you will see in an uptrend most of the move between the middle band and the upper band, most of the move between the middle band and the lower band, right? Most of the move, right? So this is how it happens. Even in, say let's take Bank Nifty for example. Okay, in Bank Nifty also you see that the move between the middle band and the lower band. Now this was a deep corrective move. Okay, right now we are not, a very specific distribution was not there, but yeah, this overall is a part of a distribution. So if we come to, 4 or 5 days ahead we go, if we come to higher levels, then there's a chance of correction because we have crossed the alignment of the trend in terms of volatility. Now these things will be better explained if we have more time. But till now, I'm looking at this. Okay, fine. Mr. Tumma is asking a question again and again. I was about to take this question later, but think it. I'll explain you now. Don't worry. So Mr. Tumma is asking uh, how to book full profits. I'm only booking partial profits. Please explain, sir. So Mr. Tumma, the thing is, you have emotions, right? Now, how do you objectify, sorry, not objectify, how do you make those emotional nature of yours into objective nature? That is your problem. Your problem is not booking partial profit. The problem is, sir, I am feeling the fear. Yes or no? Yeah? Yeah? Thank you, Nitish. Yeah? The problem is you're feeling the fear, Mr. Tumma. Right? So, when you're feeling this fear, and this session will go a little bit longer if you don't mind, right? The problem is that you have not developed the trading as a skill. You're developing trading as a nature of gambling. I'm not saying your intentions are bad. Please don't take me otherwise. But what happens is when we don't know what we're doing, fear comes from that space. And you will feel something possibly, like a headache or probably in your belly, you feel the butterflies in your belly and things like that. That is not how you're going to be able to trade because you cannot account for every wrinkle in the market. Suppose I can say that, okay, chalo, I want to take an entry over here. My first potential target is this. I cannot account for how the move will come from here to here. It can come straight away like it has. It can come in certain breaks. Okay. It can have corrections which are deeper, etc. But as long as I maintain my stop loss and go ahead, it's fine. If I go short over here, I cannot say how the market will move. I cannot say in the last pullback will happen or not, or it will just keep going straight away this day only like this. I cannot say. All I can say is that, see, I am taking this trade entry and this is my potential exit. This is the broader trend. I would like to stick with the broader trend. If I can do that much, my job is done. To develop that objectivity, you have to take trading as a skill. You have to build that skill. And how much ever I keep saying, as I said, if I go for paid calls, then a lot of people will flock onto me. But here when I'm telling that I will teach you the entire thing, I'll teach you how to do the fishing rather than give you the fish curry. Then I want to see that, I want to see response over there when people are like, yes, I want to learn. Because that is what's going to help you. And that's going to dissipate the fear eventually. I'll give you an example. And there's so many examples in my old students and all, of students who have come with a very poor state of mind, very battered, mentally battered and shattered as a trader, and don't know where to look at, what to see, etc. To nullify that effect, you can't do anything about it. That is a belief structure in your brain which is created, and every time you see a red color M2M, that belief structure gets activated, right? It gets activated. No, Karunakar, there is, Mr. Karunakar Raju, there is no pole and flag over here. There is no pole and flag. The pole and flag doesn't look like this. Even the pole is not here. Yeah. So what happens is this gentleman comes completely battered, completely shattered, and uh, he wants to change his life, turn his life around. So I had a seminar once in Bombay 2 years back. I've had other seminars in Bombay, but this one was the last one. Next I'll come to Bombay only for seminar. And he was staying in the same hotel as I was. We met in the lobby incidentally, and we had a chat in my room. And then I got to know that he is such a gambling nature that even to come, he came from Hyderabad to Mumbai for the seminar. Even to come to the seminar when he took the train, to see if he can cover the cost of coming to the seminar, he called his broker and took a trade, and he lost money on that. That was the nature of irresponsibility. And then we spoke a lot about psychology. Before this, I had not really consulted anyone on, trading psychology amongst the retail traders. I did it only with professional traders. But he was the first person, and he then later came to the course, etc. And after the course and after a few months, he developed a reserve, as I asked him to, develop a reserve of confidence. Knowing what you're doing it and achieving the result. Knowing what you're doing it, achieving the result. The more you do it, the winning attitude does not need to come. It is there. It is a reserve you can always tap into. So he created that reserve with his practice. Yes, absolutely, Manveerji. That is what. The skill development is what the course is about. It is about the skill development. Absolutely. Yeah. And the practices that you need to do. So the practice happened. Now this gentleman developed, and right after that, he is so strong that every single trade he is taking, one trade, two trades, a day, not more than that, preparing every day. Such a light-headed person now. Just a change in the everything. Then someone again, I'm talking about the absolute extreme cases. Someone came to me last year, December, and by somewhere around April or June, there was a lot of change in that person. And that fear dissipates. The fear has a nature. Just the way fear comes, the fear goes also. But the problem is we fear so much that we don't see it going. And we fear such negative emotions, every negative emotion so much. Even gluttony, like people tend to overeat. They have a habit of overeating in tension. How many of you believe in what I'm trying to say? Right? Then that is like, yeah, that is like a very big problem again. Right? So the fear dissipates. I hope I've answered you, Mr. Tuma. Uh, you need to let the fear dissipate by developing the reserve. And over a period of time, as you take the trades, you will get better. Your skill will get better. I don't personally criticize myself on trade by trade basis because I have to develop a skill. Even I have to evolve as a trader. I have to evolve and achieve things, and what I found as mental blocks few years back, now I do very easily. But that doesn't happen in one trade. If you took a partial profit and didn't take the full profit, the lesson is not you to run behind the trade now. The lesson is the next time be careful. And next time if you can't do it, try again and try again. But if you try again, only emotionally, it will be very difficult. Better you learn and then try. That will be much better. Are you getting my point? Like yesterday was a very volatile day in the market. Today is relatively such a lull day in the market. Okay. Nothing much is happening. So if there is not much movement on either direction, so how do I trade? This is what yesterday I was saying. Even as intraday traders, you will find that there are days when there would not be so much movement. You will have to let go of those inhibitions. Like yesterday by the second half, one of the really good charts I felt like was LT for a short term. Okay. Now today I said I would be discussing one aspect also, BTST. Now please understand when I'm talking about BTST, do not get sucked into the fact that there is something called BTST in technical analysis. No, there is not. It is just an attractive term for people to wait less for their trades in the market hours and takes them easy money out of the market. Now if you make 4-5,000 rupees on BTST, you are running the risk of much bigger without a stop loss if it is coming specially. That is a problem, right? Because you don't know how much you're risking to earn that little amount of money. But if at all there is any scope of BTST, how it is? It is by seeing the last few hours, how the prices are closing and how the daily chart is developing. So if the stock is in a strong momentum, there is a chance that it will continue and immediately after opening it will rush up, or immediately it will gap up open very big. Okay. So if a stock is in a strong momentum, in that case I personally prefer looking at the candlesticks and Elliott wave theory in question. One of my famous, not famous I would say, they are much bigger than that or better than that also many times. But one of my first way of seeing BTST, okay, and I'm going to show two examples, one bullish and one bearish, okay, which worked out very beautifully for me. Now this is 2014 and somewhere around here I was trading Maruti, okay, and although I did not have the idea that it would be BTSC, it ended up being so because the strength was so much. Okay, so this was not intentional, but it ended up being so because the strength in the pattern was so much. So what pattern is it? It is Elliott wave theory and it is very deep. So we will do it. If you want to come to the course and do it, we'll do it in a couple of sessions, but I can't say it in short term. So Sun Pharma, the second example. This is easier. This everyone can relate to if you have some knowledge or if you can just follow what I'm saying. Okay. Now Sun Pharma, so is the stock which I chose to just remove the tools. Chose to go short over here. Now when I go short over here, my essence was, okay, this day I went short. My essence was we are about to break this area. So as this red candle happened, there were certain hourly chart developments where I went short by adding more puts to my account. And then there was a huge gap down. Okay. So just like that, or for example, a similar case happened once in Indigo. Okay. Similar case happened in Indigo. This is when, yeah, somewhere around here, there was this move. There's a fall, and in the hourly chart, I saw something which is indicating me weakness which is about to come, and immediately there was a third. Okay, over here I did not take the trade, but again we can see over here, right? So there are multiple evidences which may lead to BTST, as some people were asking, but it is not something which is exhaustive. Okay, so don't see it like that. Yesterday I spoke about a candle called the shooting star candle, right? This is the shooting star candle, and see how the market is following the downtrend after the shooting. It's a bearish candle and market is following the downtrend after that, right? And as I was saying, the Bollinger Band. So again, Bollinger Band also I see in multiple time frames, not just in one time frame, okay? If I see Bollinger Band in one time frame, it will be like the daily chart over here. It's an up move which is happening, a soft up move which is not giving deep corrections. The maximum moves are between the upper band and the middle band, right? Now, the hourly chart, low of the lower band to the higher band, the extreme has happened. So when an extreme has been touched, the price has overstretched in the hourly chart. If the price was not overstretched, it would have had more structure in between, more patterns in between. So all that put together gives you an essence that, yeah, fine. If it has come to one extreme, and according to this also it has come towards the upper end of the band, possibly we could see it come to the middle end of the band. Again, this case scenario is one, right? So guys, today we will take a leave and we'll continue tomorrow. And if you have more questions, keep in mind, ask in the earlier stage only. I'll take every question. If I missed any question right now, you can ask me. I'm still here. Thank you so much, everyone. Thank you so much, ladies and gentlemen, for coming and giving your precious time. And we have a total of 3 more sessions which we'll do over the days. And I'm having a great time with all of you, right? Okay, regarding anything, I mean, since this I'm using as a chance to share knowledge with you and not talk about too many other things. Regarding anything to do with the course and the details of the course, my team will contact you. Just need to message them. Not a problem. Right? Thank you, Mr. Nitin. Okay, what is my view for tomorrow according to the current chart? Honestly, Rahul, there's no view which has built up till now. No fresh view which has built up till now. So yesterday, just before the session started, a few minutes before that, we saw markets moving and taking the upward direction. My bias was upward, and right now I'm seeing that it's come near a resistance zone. So as an entry point, there is no view. If I have to tell you by the daily chart, etc., there is a chance that we might need to, we might have some more highs or some sideways movement on the hourly, but not something significant, not something I put my money now on, right? Until some developments may happen and my view can change. Thank you, Mr. Sai Prasad. And thank you, everyone. Thank you, Shakti ji. Take care. How much stop loss should we use in percentage and options? Question is coming. Sorry, I missed this one. Manveer ji, what happens is options to be traded along with the spot. So since I'm going to take options tomorrow, I'm going to talk and I'm also going to show you the charts of options and the delta, theta, gamma. Tomorrow let's take that up and we'll dive in to options and take this question up. Is that fine, Manveer ji? Right? Thank you so much. Take care, everyone. It was a pleasure having spent time with all of you. And those who are watching this on YouTube, etc., I'm just mentioning that this is not exhaustive. These sessions are not exhaustive. These are, you could say, a space time with me, with all the students which all the followers which I'm having. Some of the old students who have done the course with me are here. But what is exhaustive is a technically sorted full course, which you can check out on www.technicallysorted.com or contact my team. Take care, everybody. Have fun. I'll see you around. Goodbye. Thank you and enjoy. Thank you very much. Yes. Bye-bye.